Hello everyone and welcome to my channel. Today we have a special guest here, Sheldon M Botes, an independent financial advisor, because we see it fit to give you all the information necessary to make the best decisions for your financial success. Sheldon, welcome. Please just say a bit about yourself.
Thank you very much for having me firstly. It's really great to be able to put what I know and what I understand about finances out into the public space. So I think it's really great. And I think what's important for us to understand and what we're going to discuss here today is that financial advice is very unique to every individual, of course. And with that, if we can just, small disclaimer, that this cannot be constituted as financial advice to an individual. Okay, if you need financial advice, see someone who's professional, who understands you as an individual, and who learns to understand your very specific circumstances. Okay, so very much the topics that we'll discuss are broad and for anyone, not anyone in particular, you know. So I think let's just
make it
clear from the beginning.
Yeah. So take what you can, but if you need specific advice for your financial needs, listen to what Sheldon has said and go get advice that is specific to your needs. So we have a couple of questions here.
Awesome.
Let's start with loans. Most of us need loans for cars, we need loans for homes.
Sure.
But what do we need to know before we even start thinking of buying a car or a home?
So I think what you've mentioned in the beginning is most of us need loans. Okay, and that is the reality. If we need a car, most of us are not going to have the cash in the bank to go and buy a car, unfortunately, or fortunately, whichever way you want to put it. And then the same goes with the house. Okay, so a house and a car, two very different purchases. A house generally a car 5 or 6 years time period, and then a house 20, sometimes 30 years, depending on the financial institution that you engage with. So if we just look at cars, for instance, first of all, a car is not an asset. Before anyone gets their tongues twisted, it is not an asset at all. Okay, you do get vintage cars, which yes, potentially we can regard as an asset, and you can sell it at a higher price. Okay, so when you're buying a car, number one, the salesman's going to try and sell you on a very low monthly payment, of course.
Yeah.
Okay. Great. You get a low monthly payment. Everything is good. But we need to also consider that tires are not being considered in that monthly payment at all. Maintenance may or may not be considered depending on the agreement that you have in place, or the maintenance plan or service plan or whatever that may be.
Yeah.
Brakes is another example. A tow truck is another example. Insurance, another example. So the list is quite extensive, you know. And then remember, although you may have insurance on the car, if you do have an accident, there's still excess that you'll have to pay. And on top of that, during the time that you have that accident, God forbid, you don't have a car. So now, does your insurance cover the rental or doesn't it? So these are all the questions that you need to consider upfront, and not once you've got your nice shiny car.
Yeah.
Okay. Then we get to a bone of contention, in my opinion, which is often it's disclosed, but it's not disclosed fully or as comprehensively as I think it should be. We go and buy a car, for 2,000 Rand a month, and at the end of the 6 years of this loan, the dealership comes to us, or the finance house comes to us and says, all right, now we need your final payment. This is the balloon payment of 100,000 Rand. Alternatively, you can come and drop the car back off at the dealership. Didn't expect that to happen, you know. So that is something that I feel is not understood enough. It's something that's a whole topic on its own, in all honesty, where, remember, the salesperson, I mentioned it before, that his or her job is to move that vehicle off the showroom floor to a would-be buyer or consumer. Okay, so be very wary of that. Nothing wrong with the balloon payment if you understand why you're taking it out. So
and if you know that you're going to have that amount to pay at a later stage.
Exactly. So let's say you know you've got 100,000 Rand coming in. We're using that as the figure in 5 years' time. You know that's a guarantee, I don't know, for whatever reason, you know that's guaranteed. And then you know that you can afford this vehicle monthly repayments until that time. So when that 100,000 Rand is due, you've got the cash and you pay it off. There's nothing wrong with that.
Yeah.
Okay. So make sure you understand the dynamics of that. And I think if you do, then it ensures that you can then upgrade your vehicle as you go and have a better vehicle, which we all want for a little bit of status and all the rest. Maybe not always needed, but we all want that. Rather than having to go backwards and then,
maybe without a car after all of that.
After all that, Okay, so that's, I think, the main aspects on a vehicle side.
Still on the vehicle, you mentioned that it's not an asset. Someone might be watching and say, it's for business. It's helping me out. Would it still not be an asset?
So remember, for business, then it's a business expense. Okay. So you want to be using that vehicle to create revenue, money. To be creating other assets. Okay. So if I'm a salesperson, I need to get around. It's a necessary evil, if you want to call it that. Okay. So I need to go and see clients face to face. How am I going to get there? I'm going to get there through the necessary expense being a vehicle. Okay. The only time that I would like to regard something as an asset is if you can buy it, sell it on for more than what you bought it for.
Okay. All right.
There's a few vehicles in the market that are like that, but there's very little with any guarantee. Okay, so just consider that. And the same goes with a house as well, and we'll talk about that now. But the reality is that there's a misconception about what a real asset is and what a liability really is. Okay. So let's talk about the house. Okay, so first things first, you get freestanding homes, you get apartments, you get townhouses, you get gated estates, you get a variety of different types of dwellings, if you want to call it that. Okay, so let's take an example of a gated community of some sort, whether it be flats, apartments, townhouses, actual houses, but there's some sort of gated community there. Okay, so with that, the reason why I'm mentioning it, that there's levies that we have to consider. Okay, there's rates as well, which we have to consider. And then there's a day-to-day maintenance of a home that when you're renting, you generally don't have to do. Cutting the lawn, mending the fences, mending the leaks in the ceiling, and all these things that unfortunately do happen with time. Okay, so that's while you're owning the house. These monthly expenses that come up, sometimes unforeseen, sometimes we know that they're there on a monthly basis. Okay, so we can budget for that. So that's got to be in your budget. Okay, that's one aspect. Now, the aspect that we all know about already is what is the bond monthly repayments? Okay, 8,000 Rand a month, for example. Now, if you add those two together, all of a sudden it's no longer 8. Now we're sitting at 8 plus levies, plus rates, plus maybe a little stash away for when there's a rainy day and maintenance is required.
Insurance.
Plus the homeowner's insurance, plus the household insurance for the items that you have in your house. Your television, your laptops and whatever else it may be. So you add all of it together, all of a sudden your bond payment is only a portion, sometimes 50% only. Okay, but what that's saying is you've only considered 50% of the monthly repayments. I think most people are going to be in a bit of trouble if they don't consider the other half. Okay, so that's the ongoing fees, if you want to call it, the ongoing costs. Now let's go back to when you first go and buy the house. Okay. Estate agent comes along, again, a salesperson, and no disrespect to estate agents in this, and again with the vehicles, no disrespect to people selling vehicles. Okay, it's their job, it's their well-being, and I understand there's some people that are very good at that. You go to buy this house, okay, it's what you want, it's everything you need. Above R1 million, we have what's called transfer duty, okay, that will pay over to the attorneys, who'll pay it over to the state. Below R1 million, there's no transfer duty. Great. So let's assume this house is bought, this home is below R1 million. There's no transfer duty, but there's still transfer fees. That's to pay the attorney to do this whole transfer. There's a cost involved. There's estate agent's commission, which me as the buyer, I don't pay. The seller pays that. Okay, so that must be clear as well. There's also bond registration fees. Okay, not a massive cost, but still a cost that often we don't consider. So your first monthly repayment for your bond is not just going to be, if we're using the 8,000, it's not going to be the 8,000, we're 8,000 plus the registration fees, which could be 5,000, 10,000, depending on the structure of the home loan with the bank. There's rates clearance required for the home. Okay.
Okay.
That will be paid for by the seller. Okay. But then when you get that rates clearance, now you want to open up your account with the municipality wherever you are, you've got to put a deposit down.
Yep.
Okay.
Yeah.
That deposit is a few $1,000. Again, we didn't think about this. Okay. So if you do the exercise on a specific home, it's obviously going to be different numbers for different homes.
each home.
Of course. But there's a good 10, 20, 30 and upwards R1,000 there that you have not considered.
Yeah.
Okay. So really look at it carefully and understand that if you are putting a deposit down, big portion or a portion of that deposit is going to be going towards those
All
upfront
these
expenses.
fees. Yeah.
Okay.
Yeah.
Yeah, so that's about it on the home side.
And what about your own credit record, even before you can even get that loan?
The worse your credit record, the higher interest you're going to pay. Okay, so it is the real expense that most of us don't realize is there. It's that, like I say, an intrinsic expense. Okay, and to ensure that you have a better credit record or credit score, there's many different apps and programs and facilities available. Like there's ClearScore, for instance, which I use for myself. And what's quite nice is it gives you a monthly update of where you're heading. Are you heading
up,
backwards, downwards, sideways, what it is. Okay.
Yeah.
So there's many aspects that contribute to that. Okay. And the easiest one for me is just a level of consistency. Okay. So consistency in two ways. By staying with a bank or financial institution for a longer period of time, it shows that you are loyal. Okay, it shows that you, not that loyalty really means anything these days, unfortunately, but it shows that you have the ability to keep an account open for a long period of time. Okay, and by doing that, if you've had an account open for a long period of time, you should then understand the fees better that come with that account. And we're going backwards there a little bit, but it is important to be looking at what am I paying monthly to have this bank account open.
Yeah.
Okay. So just because the fees are very low doesn't mean it's right for you.
Yeah.
And I may have an account that's perfect for me but doesn't work for you. With these rewards programs and all the rest. Okay. Then the other aspect of consistency is making sure that if you have debit orders, which most of us do, that every single month those debit orders are met on time. So on time every time.
Yeah.
Okay. That ClearScore app, for instance, shows a history of all your monthly payments. And when you've missed a payment, there's a nice little red dot that's there.
It lets you know.
Which none of us want to have, but it's an inevitable happening at some stage.
Yeah.
Okay. So that is a controllable that we can control. We need to know what is coming off our account on a monthly basis.
Yeah.
That will then help us ensure that we've got funds in place at all times to
make sure
to meet those obligations.
Yeah.
Okay. And obviously with the other aspects like what sort of loan value do you have?
Okay.
What's your current asset value? What's your current liability value? And then what is your net worth from there? And that is something that your credit score is considered as well. And the reality is we all will have different credit scores.
Yeah.
But the reality is as well as we can control a big portion of that, even if we don't have a lot of assets under our name. Okay. So with credit score, very important that from a young age, you do understand that opening an account in your name is important. But, big but, don't use that account just because it's there. Okay, so let's say you've got a clothing account. Just because you've got a limit of 10,000 rand doesn't mean you have to use that 10,000 rand. But what you could do is go and buy whatever
Something
clothes
small.
you need and pay it off at the end of the month. Instead of paying it off on that day, pay it off at the end of the month. But there's no interest attached to it because it's within the interest terms.
Yeah.
But by the same token, it shows that you have the ability to borrow money
and pay it back.
And that's in essence what the bank is looking for, or any financial institution is looking for.
Yeah.
Yeah.
All right. So there you have it. Do open that account, but with a purpose, a clear purpose to build a positive credit score. Do not abuse it. And on the home loans and how to prepare for a home loan or buying a house, we have a video regarding home buying guide, and we will link it below. So that's it on the loans.